Okay, good morning, everyone. I have the exciting topic of regulations to talk about, and I'm sure after a couple of very inspiring and exciting talks that we've had from previous speakers, this may not be the most interesting topic, but I will try and make it as interesting as possible. So, you know, this industry has seen many regulatory changes over the past many years. I just picked out a few of the key regulatory changes that this industry has seen over the last few years. And when each of these changes came about, I think we felt that it was going to cause a major disruption in the industry. So when entry loads were banned, we felt the industry was going to go through extremely tough times. When direct was introduced, we felt the industry was going to go through extremely tough times. But let me just show you what's actually happened to the industry in the same time that all of these regulatory changes have come. So if you look at the AUM of the industry, it has grown significantly despite all these regulatory changes, right? I would venture to suggest there is nobody in the room here whose AUM is smaller today than it was in 2007 or 2008. So I think I have a lot of confidence in the IFA community. I have a lot of confidence in the entrepreneurship of the Indian IFA, and I believe that despite all these regulatory changes, we will continue to prosper as an industry. So AUM growth has happened despite regulations. I think what we have to recognize in our industry and what we have to recognize in this fast-paced world is that change actually is the only constant, right? And if you see, going past some of those regulations, some changes with a very significant impact that took place, we had demon, call it cash replacement, call it demonetization, call it what you will. But demon actually was a change that brought a lot of liquidity into the banking system and brought a lot of liquidity to the mutual funds, right? We benefited by a lot of money coming into mutual funds. We then had the GST implementation. And I say implemented, but as you know, we're still trying to close out the July filings. So GST is still very much in implementation. And to me, the biggest impact GST had, besides maybe the 3% change in the service tax rate to GST, is actually that it disrupted an understanding of the growth path of the economy, right? It's very difficult in this last year to figure out how the economy is actually done because of the twin disruptions of demonetization and GST. And so I think we have to wait to see how that plays out. The third big change is scheme categorization, right? This is the latest circular from SEBI. And I think much has been spoken about the fact that you're going to have to merge funds. But I think scheme categorization actually has three pillars. It's not just about closing or merging schemes, right? The first pillar is classifying funds in a standard way. So SEBI has created these scheme categories. They have defined what each scheme category means, and you then have to classify the funds according to those scheme categories. And I think that's very good from a transparency perspective, right? So if all of you can rely on the fact that when you look at a blue chip fund, any blue chip fund of any AMC across the industry, you can rely on the fact that it will now have at least 80% exposure to large caps. Then you can rely on that and compare funds on an even basis. Previously, sometimes you had heterogeneous funds being put together in a comparison set. Now you will have homogeneous funds in a comparison set. And it will be easy to compare. It will be easy to explain the fund. So I think that's the positive part about the scheme categorization. Second part is classifying the schemes. And it's only the third part which says you should only have one scheme per category, which might potentially mean for some asset managers who have multiple funds, that they might have to consider what they do with some of their schemes in terms of categorization. So I think this is a broadly positive change in terms of bringing transparency and standardization for the industry. I think the challenge I see is this doesn't address closed-ended funds, and there are actually more closed-ended funds than open-ended funds in the industry today, which may not be a statistic you're aware of. And I think something needs to be done in that space as well in terms of bringing standardization. But I think this is a positive change. The other big discussion is advisory versus distribution. And I use the term versus very consciously because SEBI is looking at it as two different things. I actually see that India is such a big market. We have touched such few people with mutual funds. We touch less than 5% of households with mutual funds in India today. that to me, it is actually both models that need to flourish and grow significantly in order for us to penetrate from this 5% if we have any hope of getting to where the US is at 43% of households having mutual funds. So I think this is an ongoing theme. Something will come out of this in future. Then, of course, we've been blessed with many KYC regimes. I call it blessed because, what else can I say about it? When you have to redo KYC every 2 years for your clients. We started with centralized KYC, then you went on to KRA KYC, now you've gone to CKYC, then you have PMLA and Aadhaar seeding. I think all of it drives towards something good in the long term, but I think all of it gives us implementation challenges as it is going on. And then finally, a big change we've seen is the rise of NPS as an investment avenue. So these are changes with a significant impact to our industry. If you look at what are other themes that the regulator continues to focus on, I think they have a commitment to investor education. And I'm sure all of you have seen the Mutual Fund Sahi Hai campaign. I think for the first time with that campaign, the industry has addressed the common myths about investing in mutual funds. Right? It's not a product only for the rich. It's not only equities. It's not a product only for 5 years or 10 years. You can get your money out instantly. I think it has addressed those core myths. And I'm sure you would agree it has made it easier to explain the product to new investors. So I think this will be an ongoing theme. And I think we are unique as an industry. We are the only industry where we spend money to educate and bring in new investors from the expense ratios of our funds. I don't think this happens anywhere else in any other industry, and I don't think it happens anywhere else in the world either. I think this is a good theme. I think the other one is around operational convenience. There's a lot of standardization work that is going on in the industry. SEBI would like us to see all of the operations becoming simplified, becoming standard. I actually have a vision, and I didn't bring my phone up with me, but I actually have a vision that 1 year from now, your handheld device will be all that you need to onboard a client, transfer the money, and complete the transaction. The building blocks of this technology exist today, right? You already have biometric authentication with Aadhaar. You're already seeding your Aadhaar number into your bank accounts. You're already seeding your Aadhaar number into your mutual fund folios. You're already seeding your Aadhaar number into your PAN. With the touch of a button, with the technology that's available today, you should be able to complete KYC, transfer money, and finish a transaction. I think that is what is really going to enable us to expand this industry much further than what it is today. I think the other theme is around costs. So the regulator is concerned about the overall cost of mutual funds. I think as we become bigger and bigger as an industry, we have to recognize that with scale comes efficiency, right, for all of us. And so I think this will be a theme that we will have to continue with. There's a lot of noise around this theme. I actually don't think Indian mutual funds are expensive, right? I think for the value that we deliver, I don't think the funds here are expensive. But I think it's an ongoing discussion that will have to be had with the regulator. And finally, a theme of increased disclosures. So if I look at the Indian mutual fund industry today, I think we are probably at the point where we have some of the best disclosures in the world, right? Your commission is disclosed, my salary is disclosed, everything is disclosed, right? You're disclosing the proxy voting, you're disclosing the portfolios. There are very few, we're a big country and we do a lot of things on paper. Yet, when you put in a transaction today, your client gets his account statement tomorrow morning. There are very few places in the world that the mutual fund industry operates with that kind of transparency and customer focus. It's unique to the Indian mutual fund industry. And I think it's going to augur well for bringing new people into the industry. So my question really is not about regulation. As I showed you in the first slide, regulation will come, regulation will continue to come. I believe will continue to grow, right? In my opinion, today is the time to gather clients and not worry about gathering assets. If we gather clients in today's time, they will become future assets for us going forward. So the focus actually has to be, how do I significantly increase my capacity as an IFA to gather and service more and more clients? And for that, I think we have to ask ourselves, are we relevant in today's world?